There's a pattern that repeats itself every single day from 9:30 a.m. to 12 p.m. EST. It's so simple. Anybody can learn to identify and trade it. And when I say it works every day, I literally mean it works every day. In fact, I'm going to prove it to you in this video because we are going to go day by day for an entire week and find this exact pattern repeating itself and playing out over and over again. And it is the sole reason that I have become a profitable day trader. It is literally one pattern, one setup, one strategy. So if you enjoyed this video, if it helps you at all, if you see an improvement in your trading, because obviously don't just take my word for it, go and try it out yourself and see that it works. All I ask in return is for you to click that thumbs up button. It really helps the channel. Also, if you haven't joined the free Discord, which is literally designed to improve your trading with tons of resources, absolutely free. I have nothing to sell you. The link in the description for that is down below. So let's get into this. Now, before we get into the actual strategy, you need to understand one simple concept, and that is supply and demand. Okay, so what is supply and demand? We need to be able to identify this because it is a core part of the strategy and the pattern that I'm about to show you. So in simple, supply and demand just represents an imbalance in price. So on the left here, we have demand, and demand is basically an area of support that looks something like this. Okay, usually what you're going to see is a small consolidation candle. It can be red or green, it doesn't matter, but then you get a massive bullish candle to the upside. Okay, now this bullish candle, you can call it whatever you like, an engulfing candle, whatever. All you have to look for is a consolidation candle followed by a massive move higher. And this creates an imbalance in the market, okay? How does price move? It moves with orders. And so what this basically represents is a massive amount of buy orders entering within this area, okay? Not only does that show that there are a lot of buyers in this area, but it also means that anybody who shorted in this consolidation is getting trapped on the upside. And so what we expect is a retest of this area and a continuation higher. Okay, so you'll usually see demand look something like these two examples. Demand is support. There's different words for it. You can call it a bullish order block if you've heard of that, if that's what you're familiar with. But in general, it's just an area where we see an imbalance to the upside. Supply is going to look like a consolidation candle. It can be green or red, it does not matter. Just a small candle followed by a massive candle to the downside. Once again, this means that a large batch of sell orders were in that area, and so it's an area of interest for institutions. And of course, anyone buying before that massive drop is going to be trapped in that trade, and so when price comes back into that area, they will be exiting their trade, and that will drive price further down. Okay, so very simply, supply and demand just represents an imbalance, a sharp move in one direction. Okay, but it is a two candle pattern. In general, you want to see one consolidation candle followed by a massive move higher or lower. Okay, it doesn't have to be just one candle higher or lower. It can be multiple candles higher or lower. But in general, this is the pattern that you want to look for. So now that you understand that, let's take a look at some practical examples before we move on. So this is going to be an example of demand, okay? When we take a look at this chart, what do we notice to the left here? We have a clear, large move higher, okay? So in fact, there's actually a few areas of demand on this chart. It's going to look something like this. And then we have one lower that looks something like this. Okay, so all you want to do is take the rectangle tool and just mark out the highest point of the candle to the lowest point of the candle, and of course this is the candle before the massive continuation higher. Okay, so we have two examples of demand. These are two valid levels of demand. So the first one you can see here, we kind of got a small reaction out of, but nothing crazy. It's still clearly held up. We never closed below the low of that candle, and so you see at least a little reaction out of that level of demand. But there's actually a bigger area of demand down in here. Why is it a bigger or better area of demand? Just because it is the area where the move really originated from, right? It's basically where this entire move higher started. The more you move price from an area, the more orders you need to do that. And so this area here is going to be a little bit stronger than an area that's already in the middle of the move, okay? But nonetheless, you see we got this small reaction, which is a great characteristic about trading supply and demand is that even if you are wrong, even if you're not going to get a monster move, you almost always see some kind of reaction. Okay, now let's play this forward and see what happens when we get down to this area of demand. Okay, and once again, you can see there we get a nice little reaction, a nice little bounce, almost perfectly into that area of demand. And if I let it keep going, let's see, we retest that area, and once again, it holds as support. Okay, so this is the power of supply and demand. They are very clear-cut areas that can offer you huge moves in one direction with a lot of accuracy. So now let's take a look at an example of supply, and this is going to be a little bit harder to spot, not as clear-cut, but it is still a valid level of supply. Okay, it's going to look something like this. All right, this is the area that we saw a little bit of a battle between the buyers and the sellers before a very sharp move away from that area. Okay, so this is a valid level of supply. Why? Because there was an imbalance here that led to this move lower. Okay, and so obviously you can see we tapped into that area of supply and went all the way back down to these lows. And just as an example, let's take a look at our risk to reward had we taken this trade. So our entry would be at the beginning of the zone, stop loss at the end of the zone, and target the lows. Okay, this is a 4 to 4.5-ish risk to reward trade, meaning for every $100 you risk, you make $450. So not a bad trade-off. And again, this is the beauty of supply and demand trading, and especially the pattern that I'm about to show you. You get these insane risk to reward trades that I promise you actually do happen. If you take a look at my channel, you'll see my live trading recaps where I capture insane moves. So now that you know how to identify supply and demand, I'm going to teach you one last concept that you need to know in order to identify this 1-minute scalping pattern, and that is going to be liquidity. Okay, so supply and demand represents imbalance. Now we need to know what liquidity is. Liquidity is just a fancy word for people's stop losses, okay? It's areas on the chart where the most amount of retail traders are getting stopped out. Where is everyone taught to put their stop losses? Above highs and below lows, right? And so oftentimes what you'll see is price will go just above a high and you'll see a reversal, or just below a low, and then price will reverse in the opposite direction, okay? This is literally all that liquidity is. It's clear highs and clear lows, okay? So now what we're going to do is we're going to put these two concepts together to form what I call an order zone. And this order zone strategy literally works every single day and shows up almost every single day. It's very rare that I do not get a trade, okay? So let's go through an entire week's worth of price action and identify these order zones specifically between 9:30 a.m. and 12 p.m. Eastern Standard Time, and you'll see exactly what I mean. So here is Monday, the first day of the week, and I'm going to use this day to show you what this pattern looks like and how to identify it first, and then we'll keep going into more examples. So firstly, we want to identify the trend. In this case, we are clearly in an uptrend, right? We're making higher highs and higher lows. The direction is very clearly up. Good. So now, because of that, we want to look for levels of demand that are also near levels of liquidity, okay? So let's go back in the replay mode here, and I will show you exactly what this looks like, okay? Notice right here, we have a little bit of a consolidation candle followed by a massive move higher, okay? This is technically a level of demand. Now also notice how we have a clear low resting in this area of demand right there. So now we have what's called a bullish order zone. This is the pattern that you have to understand. The bullish order zone is a level of demand that has an area of liquidity, aka a clear low, resting either just before the area or inside the area. The reason why this pattern works is because it follows the manipulative way of the markets, okay? We are following institutional levels of imbalance, right? That is demand, that is where the big orders are coming in, but we are also making sure that retail traders are getting stopped out prior to the actual move happening, the continuation higher, right? So now what we want to do is place our trade or place our buy order just beneath this low that's also inside the level of demand. Our stop loss will be beneath the level of demand or the demand low there, and then the take profit will be at new highs. Okay, so in this example, we have a 3.3 risk to reward trade. So now let's just hit play and see what happens here. Okay, and as you can see, that trade worked beautifully. So this is a bullish order zone. Let's move on to Tuesday and see what we have in store there. Okay, so here we have Tuesday, November 11th, the very next day. And in this example, we are going to see what a bearish order zone looks like. Okay, so let's identify our bearish order zone. In this case, we're going to be looking at a 30-second chart. So yes, even lower than the 1-minute chart. This is a scalping strategy after all. Okay, and let's clearly identify our level of imbalance first, and that is going to be supply, right? Supply is resistance, and if we have a bearish example, which obviously the trend is currently down, we want to look for supply because supply is resistance, okay? So we can clearly see up here, we have a perfect example of a level of supply. We have a consolidation candle, green candle there, followed by a massive move lower. So this is a clear area of imbalance to the downside. Now we need a clear high, a clear level of liquidity just before that area of imbalance, okay? And that is going to be this high right here, okay? That is a clear area where traders are likely to be placing their stop losses just above that high there. Okay, so now we have both things we need to create what's called a bearish order zone. We have a clear high where retail traders are placing their stop losses, as well as an area of institutional imbalance, aka supply. Okay, so those two things have now been checked. So now all we have to do is place our order at the beginning of the zone and place our stop loss at the end of the zone or just above that supply high, and we will target the lows, okay, because we are looking for a continuation lower. This is a 3.86 risk to reward trade. Again, this is the very next day. I haven't changed anything. Let's see how this now plays out. Boom. Okay, so this is a bearish example of the pattern. There are bullish order zones and bearish order zones. By the way, again, if you haven't joined the free Discord, link in the description down below. Also, if you're looking for the best prop firm discounts, I literally have all of the best prop firms and all of the best prop firm discounts in the description down below. So if you are enjoying this video so far, that is a great way to show your support for the channel. Okay, now we are at Wednesday, November 12th, and it is currently 11:30 on the chart. Again, between 9:30 a.m. and 12 p.m. is when this strategy works best. So in this case, we are in a clear downtrend. We are making lower lows and lower highs. So what does that mean? We are looking for bearish order zones. Bearish order zones are comprised of levels of supply right over here and clear levels of liquidity, aka clear highs. Okay, so this is what our bearish order zone would look like. This is a clear level of supply because we see that consolidation followed by a monster move lower, and then we have a clear high that is just before that area of supply, and so that is going to act as our liquidity as retail traders get stopped out. So once again, very simple and repeatable process. Entry is at the beginning of the zone, stop loss is at the end of the zone or just above the high, and targets are down at the lows because we are looking for that continuation. In this case, our risk to reward is 4.86 to 1, which means for every $100 we risk, we stand to gain $486. Now let's play the tape and see what happens. This is the very next day, guys. It's not like I'm cherry picking examples from multiple different dates. So far, we've had 3 days of trading and 3 setups on each of those days, specifically between 9:30 a.m. to 12 p.m. And all 3 setups have been over 3-to-1 risk to reward. Okay, so we've now moved on to the next day, Thursday, November 13th, the very next day. Clearly, we are in a downtrend. Lower lows and lower highs. And so that means naturally we are going to look for a bearish order zone. Can you spot the bearish order zone? Here we have a clear level of supply as well as a clear high that is inside the area of supply. Now usually, just a pro tip, I want my liquidity to not pass the midway point of the area of supply or demand, because then you're pretty much, by the time price reaches that area, you're almost at the end of the zone already. Okay, which just means that your stop loss is going to be very small and it just doesn't work out as often. Okay, so we have our clear high there, our clear level of supply What are the rules? We just put our entry just above the level of liquidity. We put our stop loss just outside of the zone, and we target the lows because we are looking for that continuation of lower lows, lower highs, okay? So let's play the tape, and once again, let's see what happens. This time we have a 3.94 risk to reward trade. I can't make this up, guys. Happens every single day. Again, another 3-to-1 risk to reward trade, 4-to-1 basically risk to reward trade between 9:30 a.m. and 12 p.m. This is at 11:30 a.m. The very next day, we are on the same week, the same time zone, everything is the same. It literally works every day. All right, so once again, now we are on Friday, November 14th, the very next day. It is 10:09 a.m., so we are within the 9:30 to 12 p.m. range. Now we are in a bullish uptrend. We're making higher highs and higher lows, right? Clearly, the trend is up. So that means we are going to now look for bullish order zones, okay? So that means we're looking for a level of demand with a level of liquidity very close to it, okay? Where's our level of demand? It's going to be right here. We have a red candle there, followed by a massive reversal back up. And so that is our general area where we saw orders come in to the buy side. Then we have a clear low form just inside of it. This is our level of liquidity. And so once again, our order is going to go just below the low, the level of liquidity where those retail traders are getting stopped out. And our target is going to be the high. Now in this case, we have less than a 3-to-1 risk to reward trade, which I usually do not like. I like at least 3-to-1 risk to reward trades. So what I'll usually do when this happens is place my order at the midpoint of the zone, okay? Because a lot of the time you are going to reach that midpoint level of this demand zone. And so that just lets me put my stop loss a little bit closer and my target a little bit further. And so now we have a 3.48 risk to reward trade. All right, so let's play it and see what happens. Boom. That's the video. That's the pattern. Go try it out for yourself on the NASDAQ specifically. If you want to improve your own trading and be a part of a community that is focused on helping each other grow and not just buying a course or flexing profits, feel free to join the Discord down below. If you want the best prop firm discounts, all of the best codes and discounts are in the description down below as well. Thank you guys so much for watching, and I'll see you in the next video. Peace.